Well, the private health insurance industry is perverse. It's extremely perverse. They are probably one of the biggest contributors to the soaring cost of healthcare. And whether we like it or not, we're all paying for it, okay? We already have socialized medicine in this country to a very large extent. It's just a question of how it's all paid for. And who does that? Well, the doctors. The doctors very much enable socialized medicine already. And they do this through a number of ways. What they will do is they won't refuse people treatment if they're in critical condition. All right, they'll treat first, and then ask where the money's coming from later. Okay, an awful lot of doctors will inquire as to your health insurance provider and base their rate on who you're insured by. Okay. So there's already a shifting of the payment burden onto the people who have insurance and to the insurance providers, okay? So we're all paying for everyone to have health care through our insurance premiums, whether we like it or not. It's just the way the system works right now. It's because the doctors will shift the burden onto the people who are best able to pay, and those are the insurance companies. The insurance companies have to be profitable, which means they have to increase their premiums in order to compensate for the fact that, you know, the doctors are shifting the payment burden onto them. All right. The difference being is that the people who are quote unquote uninsured don't get medical treatment until their conditions become very severe. Critical and life-threatening, which means they don't seek treatment until treatment becomes very, very expensive. Okay, so that is one of the ways in which healthcare costs are increasing. Another way they're increasing is that the health insurance providers are getting bogged down in profit-taking and bureaucracy, finding more and more complicated and innovative ways of denying coverage and figuring out which people, frankly, are not good risks. Now, what the insurance companies do is they don't fulfill any kind of social function or pooling of risk, shared risk. What they want to do is they want to establish individual contracts with people that are basically gambles, bets people make that they're going to get sick, all right? Because no one really wants to get sick, but when you pay your insurance premium, you're betting that you're going to get sick, all right? And well, maybe you hope you lose, but that's what they want to do. So they look at it as an individual bet, and of course, someone who's already sick, that's not a bet at all. That's not a gamble. That's a sure loss. They're not going to take that. They're going to externalize all these people who are too risky to cover, okay? And a big part of their bureaucracy is figuring out who to exclude from coverage, how to deny claims, how to figure out how to deny claims for people because they had pre-existing conditions. There's a whole bureaucracy, a huge bureaucracy set up around claims and trying to figure out how to avoid paying claims. All right, you know, for a lot of the talk about how efficient the private free market is, you know, private insurance, 20 to 30% of what you pay in premiums goes to administration costs. Okay, and compare that with a government program like Medicare, it's only 2 or 3%. You know, it's 1/10 what it is with a private corporation. Of course, you know, with the private corporations, you know, they don't care as long as it helps their bottom line, as long as it helps them become more profitable. They're willing to spend money to denying claims because, of course, the money they put into denying claims is something that's adds to their bottom line. Okay, so they pay this amount to deny a claim, and then they save the money that they would have paid out in a claim. Okay, so for them, their bottom line is worth it. You know, globally, of course, that gets paid for anyways. The person goes in and has, you know, has perhaps critical surgery done anyways. All right, when they have to go to the emergency ward. They don't get early treatment. They don't get early detection, early testing. They're just left out of that entirely. All right. And in fact, if with private insurance, there's no incentive for anyone to try and seek early detection, to be tested for this stuff, because if you're identified with some sort of condition, boom, there goes your insurance. You've become a risk. You can't get insurance anymore. You can't switch coverage. Okay? There's no incentive for people to find out what their medical futures are likely to hold in store for them. Okay? It's, there's every incentive for people to remain ignorant about their medical conditions, because if they know about it, that means their insurance providers are going to know about it, and then they're going to adjust the rates or deny them coverage. All right, so it's perverse the way in which it's working. It really is. So at bare minimum, there have to be a lot of regulations. There's got to be severe antitrust. There's got to be regulations about providing some basic coverage to everyone who wants it, okay? Because we're paying for everyone whether we like it or not. Medicine is already socialized. Insurance is not. Insurance is private, but medicine is still very much socialized in the way it's delivered, okay? So we're already there. It's just a question of how we're going to pay for it and how we're going to keep costs down, all right? So that's all I'm going to say for now. And thanks for watching. Talk to you later. Bye.